Hello, we should be live. Welcome back to another Lumley trading live stream. Again, markets open in about 2 minutes from now. Um, the main thing I think we had to drop today was just the American Express earnings. We don't really have much data coming out today. We didn't really have too many big names apart for the American Express release, which you can see we have dropped off of this news. I guess we can run through their earnings, see what that was all about. But yes, this Friday does seem a bit slow when looking at the economic calendar. And let me just double check. So yeah, all you have is the oil rig count, doesn't tend to move anything. Just a lot of oil and that gas data. Again, that's most of that's coming out there at 4:30 market time, so after the close. Nothing all that big. The only thing we really had today was going to be the Canadian retail sales, which came out at 8:30. That was forecasted at 0.5%, ended up coming out at 0.2%. So should have been probably relatively good for the indices. But we can see they open up in a bit. We can actually change this. Needs to go back to the futures. And we can see again 8:30, which would have been here. We kind of just continued that upward move on the indices. It doesn't seem like it broke trend all that much. But before we come into this open, we are selling off quite hard on the S&P and markets in general. So interesting to see. We will see how far we end up actually pulling back. There we go, just making sure all that. But yeah, anyway, then I guess we can go over the markets are now open. It could be a nice trade actually coming into the open. You got the VWAP and the anchored VWAP on the S&P futures at $4,577.42. Obviously, you can't do the 0.42 because it is the futures. Goes in 0.25s, but if we do come into that level, could be quite a nice day trade long, or just again a nice bounce opportunity in general. Okay, we're also seeing Tesla gap. Obviously, yesterday sold off over kind of 8%. We're gapping up just, well, about 1.5%. Looks like we could potentially retest that anchored VWAP again. American Express down 2.5% on the open. Again, this is down to their earnings. Netflix basically flat on the day. You have UAL also gapping up about 1%. We can see how that's moving on American Airlines, because American Airlines did actually sell off yesterday. Seem to be pushing up on that as well, seeing a bit of strength. We're coming into that key level on the ES again. Here you got the anchored VWAP at the exact same level, should be a strong support, but it is on the open, don't forget. So if you are trading it, I would have reduced size. Considering it's the first minute of the open, I'm not that keen on it, just because again there's so much volume at this time. The technical levels usually don't make all that difference, but definitely something I'm paying attention to. Can definitely be interesting. If we see this level though kind of holding, again given it probably at this 5-minute close, it looks like actually now we're breaking a bit, but if we're able to hold that, then again could be a nice bounce. Could be looking at the S&P for now for that next level, because again that's now coming into it as well. So we'll probably see that pullback then back to the spine, and that could be that kind of opening bottom. But again, we'll have to see how this moves. I never trade the first 5 minutes for that reason, though. Can be very volatile and can just be really hard to trade in general. I'm just opening up the news source like we normally do. There we go. And I'll get the CNBC ready. Obviously, we're not going to use it as of right now, but I prefer just to have it ready. There we go. And I will put that in this corner here. So again, then everything should be set up like we want it to be. There we go. Okay, now we are actually getting a bit of a bounce off this level. Again, it's still that first 5 minutes, so it's always a bit of a risky trade if we were actually looking to trade that. Just because, again, you can just break through those levels so hard and so quick. So that would be the thing I would always be a bit cautious of when trading those opening levels. just seeing, yeah, really, again, it's just, I think the American Express news is about it. Just to cover anything that's really come out today would have been, so by Putin, the West plans to send Polish, Lithuanian fighters for meet in Ukraine. Aggression against Belarus will mean aggression against Russia. Russia's central bank raises key interest rates to 8.5% from previously being at 7.5%. Ticker J, which is Jacob Solutions. A city opens upside 90-day catalyst watch on them. German defense minister, we are prepared to support Poland in defending its eastern flank. I wouldn't mind checking out then how J is moving then off this. Again, City has put a bullish catalyst watch on them. Oh, that's going on J and J. I mean just J. So we're up about 0.8%. It seems to be more of a gap. We're still not seeing much volume on this. Again, it did quite a lot of volume about 5 minutes into the close yesterday, which I'm guessing is maybe when it was originally announced. And now it's kind of just holding that move. But again, not a very liquid stock, not all that volatile. Is at a key level though. So that's one thing to note. 124.75. That's our second deviation on the 6 month, which we are very close to. So you can be paying attention to that if we did push up, but we did hit that level going back about a week or so. So if we did break that, we also have the 127.25. So those would be the two levels I'm paying attention to on J. But again, not a super liquid stock, so not all that focused. Now, DWAC seems like that's moving today. I've just an alert go off that. Now at $18. So yes, gapping up 35% today. So we'll start seeing how this can move. Let me just get the gap scanner actually on so I can see what gaps are on. What's up, William? Can't get filled on DWC and Robinhood. Watch it go to 100 again. How weird. You just said DWC as I was already looking at it. Yeah, might be a squeeze. Is there any news on this? Let me have a quick look. Trump classified documents, trial date set for May 20th, 2024. DWAC are trading. Okay, oh yeah, so it has the company has announced it's reached a settlement with the SEC. So yeah, we're squeezing out of this. Let's quickly update these levels because they have slightly moved. So that's actually a bit lower. That was at 1806. The nice level where I'm looking at DWAC then is if we can push to $21 to $22. That seems to be some really nice key levels. So at 21.70 or 21.12, you have the second deviation on the 1 year, and at $21.70, you have the third deviation on the 6 month. So those would be the key levels. Again, just to kind of show you that zoomed out what I'm looking at. This is that key focus I've got then on DWAC. If we can push up again, that level we've already broken through it at 1806. If we continue higher, looking at 2112, 2170 is key resistances. Now coming into here. Again, if you're long bias, that's where I would be taking profits. It is hard to borrow as an actual stock, but does have options. The options will most likely be quite liquid today. So that's how I will be looking at them. Looking to trade the pullback. If we are able to get there today, I'll look at it from a day trading perspective. Just get some intraday puts. If we're not really pushing it today and we end up seeing that move come later next week, then what I'll be looking at is probably if vertical spreads on a trade like that. But either way, up now 40%, having some nice moves. Again, if we're looking long bias on this stock in intraday, we could be looking at the retest of that 1806, or we can be looking to trade the retest of the anchored VWAP. We can actually zoom this in a bit, considering it's more of a momentum stock. We can do that and that. There we go. So that's the key thing. Okay, you're seeing Netflix sell off. Netflix turned red. American Airlines also flip red. Tesla giving back most of its gains. It looked like that might flip red as well. You're also seeing the VIX sell off into the open. The euro dollar hold. The bonds hold. And after we've hit that anchored VWAP on the futures, we're seeing the S&P hold that level as well. So we'll see if we can get a bit more of a bounce. Again, if you guys got any stocks we want to run through, let me know and we can run through them as well. I'm just going to quickly do something. So I'm going to let the news play for a second, but again, send through any tickers. We'll run through everything.
Their guidance essentially relied on what their customers were telling them.
Yes.
And the customers did not have a good handle on exactly what the trends were going to be.
Absolutely. Also mentioned the freight recession should be coming to an end. So again, some signs of hope, much like we saw from the banks in the investment banking world, that they're seeing green shoots and that there's some reason for optimism here. Potentially why the financials had such a good week. And it wasn't just the big banks, it was the regional banks too, which were up more than 9%.
And we saw Comerica leading the S&P gainers before we started trading. We should take a look at Comerica. We had a couple of other regional banks this morning, but Sarah, to your point, they are doing quite well in the marketplace. Second quarter results, Comerica says, were strong. The earnings number per share was $2.01. There you see it, not up as much as it had been. Record average loans, second highest quarter of non-interest income in history. Of course, the concern has been, given what we saw at SVB and Signature and First Republic, that deposits would be hard to hold on to, and that would essentially mitigate their desire to lend money or even be in a position to do so.
So the best performers week to date in the financial space, Zion's up 22%, KeyCorp up 17%, and Charles Schwab up 15%. Those were at the center of the worries about contagion during March because of the mismatch and, of course, you know, the assets and liabilities, because of concerns over deposit outflows. When Schwab reported the stabilization in deposits and the good news this week, and the stock went up 12%, Mike, we talked to Walt Bettinger. Yeah. That was a moment. That Absolutely. Was a relief moment, I think, for the sector and for the stock.
Yeah, and in general, the regionals have returned to deposit.
Morning, everyone. Seeing a lot of new faces in here. Again, we've already covered the DWAC, so that's interesting. What's up, Suns? Oh, I forgot how you say it, sorry. Is it Sunzeller? But morning, happy to see you again. Ronald, NNDM Golden Cross. Let me check out NNDM. I've not really been touching it. For the main reason being, it just, like I said, it just doesn't seem to be a big mover as of right now. Yep, Tesla coming down. Looks like it's giving back most of it gain. Basically going flat on the day now. Seems like it's giving back all that gain. You've got that gap fill. So that's quite interesting. American Airlines gave back all its gains, starting to push back to that anchored VWAP. And again, Netflix seems like it's Netflix still down on the day, basically. So yeah, everything is selling off. It's weird because the market's gapped, but again, there isn't really any news for it to be gapping off of. Nothing seemed too strong. So not too sure on why we're pushing up. I guess it wasn't a massive, and it was probably just as well due to that sell-off we had today. Again, DWAC is popping today. This is off an SEC settlement. Our deviational level is at 1806, and it actually seems like we basically retested this. So I would be quite bullish now on DWAC. Again, we've broken above the level. We came back, we tested it as a support, also tested its VWAP. We've now looked like we've held this level, so I wouldn't be surprised to see it now break that intraday high. And if we can continue again, we got these key levels at 2112, 2170. This is where I would start flipping short bias and look to take either day trade or swing trade as shorts. At least that's how I'm looking at trading it. Tesla going down because the bulls are selling. I think right now, what most likely it is, again, because it's not had a massive move, so I think it would be a bit maybe harsh to say something like that. But I think it will be, a lot of people were, when you see earnings, especially on like a Tesla or something, where they move 8% on the day, and I'll actually show you an example if we zoom out, what you tend to see on these is that they tend to bounce the next day. So if you don't get like a relatively strong bounce, or if you do get that bounce that we had there, I think we were up 2%, you will just have people kind of taking profits. And that might be more traders, not investors. I would say that's probably more traders who bought into the earnings play, or maybe institutionals potentially, selling it out if they think it's going to continue lower. So let me quickly get a longer term chart and show you what I mean. Because again, we do see this time and time again. So here's a Tesla chart. So we can see it on the Tesla for the example. So again, we had our earnings. We gapped down. And again, we closed here. We then gap to this level. And again, it gets sold into. And again, this is normally just profit taking on that next day. And as well, don't forget, we are coming into the Friday. So then you have the expirations. If we zoom out, we can actually go out even further. And again, then we can see it most likely on the earnings after as well. So again, the same sort of thing here. You had their earnings, you had that gap. We didn't really get that much of a sell-off into that one. That one seemed to actually be quite strong, so probably not the best example on that one. And we can't actually see any more further back unless we zoom further out. But yeah, that's normally just a pattern you tend to see. It's a day after earnings. A lot of the times they will just get sold into. Just because, again, yeah, it's usually just profit taking. But Netflix as well is popping. Hitting anchored VWAP just as a heads up. Seems to be outperforming the market again. SPY hitting the lows. Now we're now testing the anchored VWAP on the SPY. So it looks like we're going to fail on the ES. We're getting that bounce on the SPY. So again, these are normally scalping opportunities. If not, you can try and usually catch the trend continuation. But right now, everything is looking weak. Just everything is selling off into the open. So again, I would probably give it a bit more time, let everything play out that bit more. Again, we'll get the DWAC chart because I think that is going to be a key watch for a lot of people today. Kind of consolidating near these highs, but again, I think that's just because the overall market's weak. So don't forget, when you're seeing, you know, that individual stock stay near those highs while the market's selling off, that still requires a lot of strength to even be able to stay at those highs. So DWAC, I would definitely expect to see a break. Want to see a move to $20, and if we can break that, then the key levels again at $21.12 to $21.70. So I'm going to quickly pull up just so we can see if there's any other key news. And then let me quickly open up TweetDeck. I'm not seeing anything come through anything else. And see if there's a rationale for the moves. Again, we're actually now seeing the euro sell off quite hard, dollar getting strong. I think it's glitching for some reason. I'll reload it. Yep, for some reason TweetDeck's having issues today as well. Just saying no one is tweeted. I have one other solution where I can get news from, and so I'll see if that's working. Okay, yeah, we've got the news from here. What I'll do anyway is I'll throw in Squawk in the background, so again you can hear if there's any key headlines, it'll get shouted through. But again, okay, so to cover then what we need to know today, American Express's revenue miss estimates. And again, actually, we'll actually throw up, say, American Express here, because we probably want to be keeping an eye on it, considering they've had their earnings today. But again, that's why we're down basically 5% on American Express. What about Matt and... Oh, wait. What about Matt and the Barbie movie? Is Matt a ticker? I don't really know what you're looking at from that and the Barbie movie. I haven't really heard anything to do. I'm guessing that's a stock you're talking about. I've not heard anything about it. Seeing it on the news, something to do with it then. Oh, actually, I think I did hear about these. Are these ones? Yeah, they sell the collectible toys or whatever. But either way, if it is, I think the move would most likely be dead. And the reason I say that is, again, I mean, I remember hearing about, I didn't know this was the stock exactly, but I remember hearing about the plays. Yeah, because of the Barbie toys or something. Yeah, I think a lot of it would be priced in by now. Again, if we zoom out, I think this would be something like the earnings plays, where you see this massive move here. And again, this is most likely, again, I remember hearing about this maybe 3 weeks back now. I didn't know this was the exact stock they were talking about, but if it is, then again, this is everyone buying into that expected revenue increase. So what you'll probably see, and even now you're starting to see a bit more consolidation or kind of weakness, what you'll probably see, I don't know when they report their earnings, but what you'll probably see on their earnings is what we've seen on a lot of these bigger names like the Teslas and Netflix, where they've done this run up pre-earnings, and it's very rare they're going to outperform what's expected and what's being priced in, and you're probably just going to see that sell off. So I'm not all that keen on a play like that. I think it's way too late to the news now. Again, it would be the kind of thing where maybe on the announcement date of Barbie, you buy into the stock. If the move isn't perceived all that well, then again, the move probably won't play. You won't really lose much money. You won't make much money. But in the case like this case where it performs really well, then obviously it can fly. So I think it's one of those things you've got to get in very early with a play like that. And I think trying to jump in now would be definitely too late. What's up, Ben? Lumley, what about PGY? Let's have a quick look. I've not heard that ticker today. Or I've not even heard it recently, to be honest. So, see, it's also had a nice move. Again, I'm looking at it from kind of late June. It's really been on a takeoff. I'm seeing that they have some news. This seems to be from yesterday, though. Announces 800 million ABS with $3.9 billion raised this year. Hearing chatter about it on Wall Street Bets and Stock Twits. I use Stock Twits. I haven't actually heard it there, though, weirdly. I'm just reading through the news real quick. So they did just have, oh no, so from their May earnings, reported EPS 2 cents beats. Okay, so they're still not a profitable company. So again, I would be careful with that then. So their earnings per share last quarter was 2 cents, and it beat the estimates of a negative 3 cents. Heard about it, sounds juicy. Financial growth is phenomenal. Let me actually, so I can have a proper look, let me just quickly bring up their balance sheets or whatever so I can kind of see how their revenues have been changing. What was that ticker again? PGY. Let me just pull this up and then I can quickly see a bit more about it. Financials. Oh yeah, damn, yeah.
So Russia's Deputy Foreign Minister says the ball on the grain deal is in the court of our foreign partners.
Yeah, 2020 revenue 91,000, 2021 445,000, and total revenue in 2022 685. That is numbers in thousands, though, so don't forget they're not making massive numbers, though. So that's one thing.
This stream is sponsored by TickStrike.
That's one thing I'd be a bit more cautious of. We just quickly check other thing. It's not all down to revenue, gross profit. So the difference between, I can even actually just pull it up here. Oh damn, euro selling off massively. Obviously the SPY's pulling back as well, but euro super weak, broke yesterday's low. PGY though, from an intraday perspective, getting an all right bounce or potential bounce off the anchored VWAP. Just to quickly pull up though the numbers on it. So again, revenue growth is amazing, like you said. The only thing that puts me off is the gross profit. Again, even the difference between those two wasn't all that great. And then the earnings per share has somehow got worse. Or actually, they haven't diluted. So their earnings per share has somehow got significantly worse, which shows, yes, they're boosting their revenue, but they're spending a lot more to be able to get this revenue. So as of right now, again, I would be cautious from that specifically as well. Net income. Net income. Yeah, you're seeing a bit of an increase in that. So definitely, I think there's definitely, strength can be there. It's just, I think it's one of those plays when you have any of these kind of names where they're not really that profitable as of yet. If you're putting money into them, there's a lot of money to be made, but you can you have a lot of money on the you need to be able to risk the money you put into it. So could be good, just depending on what kind of stock you're looking at. If you're looking for, a relatively safe investment where you don't want to lose your money, that's not going to be a stock. But if you want the upside, then that's definitely it. Revenue growth really caught my eye. Yeah, the revenue growth is great. I have to agree with that. That fair grain deal has Europe on the edge for sure. Thanks for your input, mate. Been trading for 3 years. You're my fave to watch and learn from. Thanks, Ben. Admiration and respect in the US. Thanks, man. Where do you live in the US? I had the Squawk muted. It just said Dow is now flat on the session. Just to cover other things, actually, were key last night, which I don't think we've gone through so far. Japan's top currency diplomat, Kenda. Excessive FX moves are undesirable, so strengthens the yen. Bank of Japan, we see little to act on yield control for now, which then weakened the yen. And UK retail sales month-on-month actual came in at 0.7%, forecasted at 0.2%. So strength in the sterling, probably going to be weak for the FTSE. Could grab the chat again. I'm in a mid-sized town in the US, South Carolina, Columbus, Georgia. Oh, I've never actually been there. I've only ever really been to the coasts. I used to live in Connecticut, so I'm more that side. US Army brought me here, stayed when I got out. Nice, I'm guessing you like it there then. What part of UK? I'm basically near enough, well, Greater London right now. Trump has 4 rallies scheduled next week. DWAC going back to $100. We know he's finally going to talk about it now that the case is settled and he's allowed to. Yeah, I could. DWAC again is one of the names we keep kind of seeing those big mega moves in. And I feel like a lot of these plays, there's definitely upside moves. Like right now, again, we're kind of breaking these highs, which is good. I'm going to be a bit more short bias from that $21, $22 range. But again, I'm not stupid. I know it can squeeze. So when I'm trading it, I am playing it with defined risk because, again, I don't want unlimited risk. I'm not going to short shares, for example, and have unlimited risk because it could definitely squeeze. But again, we're probably different kind of traders if you're thinking it's going to $100. But again, that's why I would trade it a bit differently. I'm not a big fan of the hype names, so I tend to play against them. Saw Trump a month and a half ago, shook his hand, was wild. Good to hear, good to hear. DWAC doesn't interest me, but Rumble does long term. Yeah, I guess that's the difference as well. I don't imagine DWAC would be a long term play. Rumble definitely could be. What's the stock now? $8.30. Kind of pulling back to its first deviations. Yeah, if it comes down to 760, I wouldn't mind even actually grabbing some. It's one of those things I actually hold a tiny bit on the long term account. I hold a bit of Rumble. It's not something I'm going to grab massive size on because, again, for the long term, I don't really like too much risk. And I think this is still a very risky play because I think even right now, you're seeing, well, obviously you have YouTube and not Twitter, Twitch at the top. And now you're seeing Kick, which I think is making a lot more of a name for itself than Rumble, even though I think it came out later. And so that's the only thing that puts me off with Rumble. I think that they're not making anywhere near as big strides as Kick, but at the same time, it means they're not spending anywhere near as much. I mean, Kick did that $100 million deal. Is that really going to be able to, stay up? Probably not. So that may be where Rumble then can take the competition. I'm looking to enter Rumble at $8 or around $8. And slowly add on the dip. Same, just small positions to roll in. Rumble is risky. Yeah, I think that's how I'm playing it. I don't actually mind trading it, especially from a trading perspective. I've traded the stock a few times. I'll show you the deviation chart from it. It's quite a nice trading opportunity from the deviation charts. Whenever you're really just coming into the first devs, it tends to be quite a relatively easy reversal play. And again, if we do end up pushing to the second or third deviations, we can always look to play those reversals. But it seems to be quite a nice range-bound stock, which is always nice. Obviously, it will work great until eventually it doesn't. But, even if you get one win, can probably offset that one loss anyway. So, in a case like that, I'll keep trading that till that strategy really fails. Because then it doesn't even really matter all that much. How's Cavana right now? Went from 47 to 44. I haven't actually checked Cavana today. Let me have a quick look. Down at 45 as of right now. Again, still kind of just came back below these third deviations as expected. Really, my main focus then would be on Cavana is basically to come and fill this gap. So again, we got the gap fill at $39.83. So I think we could definitely see that gap fill there, maybe even today. If the overall market continues to sell off, again, looks like we're coming in to fill those gaps on the SPY and into yesterday's close on the ES. So I think that will be the moment of truth. If we crack below that and continue down, then we will probably see maybe Cavana even fill that gap today, which could be nice. Because weren't you holding the 51 puts which expire today? So I mean, you're going to be super in the money now, which would be lovely. We'll play it. I might actually trade out of some of my. I think I've got the August 11th. I might get out of some of those today because they're going to be super in the money now, which is quite a nice move. Yeah, extremely predictable last year post double bounce. Dispatch move. Yeah, the Rumble move is quite nice. I do like those range bound stocks because they do usually just provide pretty easy opportunities. Was debating buying it at $4. That would have been nice, but again, it was easy to say in hindsight. I still remember, obviously, in 2021 when you had the massive GameStop move. Remember when I signed up to, I think it was like Robinhood or WeBull or something, I got it as free shares. And then, because I already had some, I bought some. And I think I had maybe like 100 shares in there, maybe 150. And again, this was when I was kind of more getting into trading. Sold them out when they made like 100% profit or whatever. And then yeah, you look back, they went up to like, what was it, $500 a share or something? It's just imagine if you stay in, it could have made crazy money. We'll actually keep it up then. I want to kind of get rid of Netflix. I'll put DWAC on this left corner. Okay, yeah, DWAC. I thought I put an alert on it. That is flying through. I'm actually going to put it here. I'll put Cavana over there because I want to look at potentially opening up a trade on this DWAC move then. Because that is a crazy move. Yeah, breaking through there, not even paying attention to that resistance at all. Tesla 260 could be nice. And on my pops sold his and my pops sold his VRM for 70 cents right before this run. For peanuts. Let me quickly check VRM. I've not seen it in a while. Oh yeah, damn, 220 now. Yeah, that's crazy. Yeah, this DWAC I think, yeah, I'm probably gonna grab some day trades on it. Again, we got one more resistance basically on this, and that's at 26.88. So if this stock gets there today as well, that will be the mega trades. And again, what these levels from, these are all the deviational levels. So we're hitting into this range now. Seems like we've kind of just broken above it. If we come back for that retest, could be the key. But considering how strong we are today, I might just wait for that move to 26.80. If we miss it, we miss it. But I would rather miss a move than, you know, kind of force our way in now while they just seem so much strength. Don't really want to short it while it's still being this strong. Yeah, halted. I see that. Yeah, I would imagine probably going to push up on that unhalt anyway. Also, just to note, I remember seeing a comment on it on my channel yesterday. So this EDTX, there's someone saying they couldn't sell their shares. Again, this is currently halted by the Nasdaq. I think it was halted on the 14th of July under Section T12, which means they're pending news from the Nasdaq. Then they're not going to be resumed, so can be resumed for a while. If you're wondering why the DWAC halted, it would have just been a circuit breaker. So if a stock goes up more than 5%, I think it's in 5 minutes, it will halt. And it has to be above 5% in those 5 minutes. So we'll see how that is. It should really be, I'll check the Discord, it should say when it was halted exactly. Let me see if it's come through. Halt activity. Quite a lot came through. 9:56. I don't think it was halted. Oh yeah. So it was already halted today anyway because it resumed trading. I'm looking to see if it says about its rehalt. No new news on that. But yeah, it's all just basically circuit breakers, volatility halts. Yeah, it got halted also at 9:41 and resumed trading at 9:51. So normally I thought they were always 5-minute breaks. Again, I don't really trade the small caps, so I'm not as clued up on it anymore. But I think they're normally 5-minute halts, but for some reason they were halted for 10 minutes on the last one. So we might see that same thing again. Halted at 9:58. So again, we can look at the 10:03 release. If it doesn't come out by then probably 8 minutes past 10, we'll see it continue to move. Going to 30 post halt, I believe. To be honest, that would be a crazy move, but I would be down to see it. Because if we do, I do want to grab. I said, I mean, I think we're trading it in different directions because I'm probably going to be trading that short bias. But I would like a move to there. And again, that's why I said, though, I'd never short the outright shares with no sort of hedge. Because, again, a stock like this, you don't want to be stuck short in a halt like this. Because, yeah, if it does come out, even if it goes to any, $27, you couldn't control that $500 of risk per 100 shares. So, again, that's why I tend to trade either vertical spreads, short the shares, buy calls to define the risk. Or just play outright puts if I'm trading it short bias. Throw caution, bro, but if it does go up, it won't stay up that long. Yeah, short on this thing could get nasty. Yeah, exactly. Well, I'm not going to throw the caution. I think you've got to have the caution. But yeah, that's how I look at these. Again, obviously you can make money on the way up, but then I think you have to time it quite well. And that's why I prefer playing that downside move, because I think you know, if it goes to say $30, I know 9 times out of 10 the stock's going to come down to say at least $18. So I can short there if I've got a defined risk strategy. I don't have to get stopped out. It can fly up to $100 if it wants, and as long as it comes down eventually before my options expire, it's all fine. You're in the profit. So that's how I prefer to play them, because then again, you don't really need to, you know, kind of get scared out of your position basically. Personal question, if you don't mind, what is an average short position for you in monetary value? You know, I don't mind answering that. To be honest, okay, we just came out of the halt, by the way. DWAC doesn't seem to have moved all that much. This normally means you'll get the pullback, yeah, which we're seeing now. Again, retesting our deviations, you're saying buying pressures, you would have had orders sitting there. Seems like we could be getting bought up. If we retest it again, those orders will all be gone by then. Yeah, cool if you're not cool if you totally understand. Take it you're trading on a larger 25k plus margin account. Yeah, I am. Well, actually, I don't actually trade on one account now with 25,000. So I keep some money in Think or Swim here, so I can get in some trades easier. I also have some money in Ninja Trader, which is a futures platform, and then I also have Tasty Trade. So actually, I don't have one account above 25,000, but I don't take day trades all that much, so I don't actually need that. The PDT thing doesn't really bother me too much. But I'll probably put at least 25,000 in one soon. But yeah, anyway, when I'm looking at something short like DWAC, I'll risk normally say $500 would be my absolute max risk. But again, for me to be able to risk $500, you'll probably be going into the trade with probably 10-15 grand worth of margin or capital. Because again, like if I'm short in the shares, you know, for every 100 shares you're short, you're meant to have around 2 grand in the account. So you know, if you're shorting say 500 shares, that's already going to, well, I say 250 shares, you know, you're going to be risking 10 grand in. What am I even speaking? I don't even know. Yeah, no, if you risk, what am I even thinking about now? Oh yeah, I am being super sorry. Yeah, so if you short say 500 shares, which is, I would normally go between say 300 and 500 shares when I'm shorting. Okay, we're squeezing to those highs. Yeah, if I'm shorting 300 to 500 shares, you know, on the high end you're going to need 10 grand of capital just to short those shares, and then you offset some of that risk by buying the calls, because again, then your risk is defined. But your broker still requires you to have that money. So normally then I would need, say on the high end, probably 9,500 for a trade. DWAC squeezing though. See if we can push up again. I'm looking at the key level at around 26.88. Again, that's why I like paying attention to these deviations, especially around halts, because if you get that pullback again, orders will just be sitting there so that it gets bought into usually automatically. Starting to get a nice squeeze up. Very cool, thanks for sharing. I'd like to short because I hate theta with puts. Yeah, it's not too bad normally if you just go out a bit. And again, on something like this where it moves so quick, that theta shouldn't really matter. I said the way I normally play it is, again, I'll normally short the shares and buy calls. Or if you don't want to get a bit affected by theta in a negative sense, you could always do credit spreads, which is where you short an option and you buy an option, so your risk is still defined. But as you own and as you both own and sell one, you're not really getting affected by the theta, because obviously the one you sold you're making money on, and the one you buy obviously you lose a bit of theta on. So that could always be a way to look at it when the stock like this has options. Vertical spreads could definitely be a route to go down. Again, they're normally about 1-to-1 risk to reward, but yeah, you can usually get around a bit of that theta issue with that. DWAC market cap should be around 1.12 billion. I don't even know what that market cap is. I'll look at that in a sec. This thing has room to move. Yeah, it definitely has room to move. Offset, of course, but it's also offset in profit. Yeah, it is. Yeah, like everything, it's going to have its pros and cons. So yeah, I guess it's always down to what you prefer. Because that's usually how I like taking a lot of trades, is through those vertical spreads, but I'm quite a conservative trader, so to me that makes a lot more sense to basically be hedging I'd rather sacrifice a lot of the profit, even if, I can offset then most of that risk. Also, the VIX is crumbling, coming down to around 1350. Just as a heads up, again, the SPY and the S&P futures kind of bouncing off their yesterday's close. So again, if we come back to retest this low once more, then I think that could be quite an ugly day. We'll probably continue down. Again, Cavana down now at 43, or did push down to 43.60. AXP, so again, American Express down 5.5% now. You also have Tesla now, down at 259. And again, DWAC, now we're getting a bit of a temporary pullback. Again, this could mean all that strength is there, though. When you keep getting these kind of small pullbacks, I actually prefer these moves a lot more to the upside than the ones where you kind of just skyrocket. How did you get into trading? Parents' friend got you interested. VIX down because of the money they gave. Zen Sky. I actually got into trading quite weird. So I was at my American uni at that point, and I think it was spring break, and I just saw a stock. I think I literally had the on your iPhone when you got the stock apps or something. Kept seeing it was IIPR, which I think they do like real estate for marijuana stocks. I just saw that, and literally I opened up a Robinhood account, bought that, and then I didn't really do too much with that. And then it was like, literally maybe a week or two later, that went up like 10-20%. And obviously I think that's how you always kind of get into it. You just find that so interesting. You're like, oh wow, that's crazy how you can just make that from home. So I did that, and then obviously if you invited people to Robinhood, you also then got free shares. So invited a few people, you got those free shares, and then I think that's kind of basically how it started. And then a few weeks later we had spring break, and that's when COVID hit, the lockdown started. So after that, I wasn't going. Well, basically after spring break, I wasn't going back to uni. So I then kind of just I was at home a lot more. So I literally just spent the mornings. I think woke up about 8:30, would trade till midday, and then I normally had the online lectures or whatever until 2. Come back for the close, and that was basically it. I just kind of started out of there for some reason, and then ever since, never stopped. But I mean, that's how I got into it. How did you get into it? If it's something you can type, unless it's really long. But I guess you could kind of say it as well. My parents kind of got me interested, because my dad was a banker, so I guess I always heard about things like the markets and stuff. But he wasn't, a trader himself, so it wasn't like he was pushing me to get into it so much. Grandfather was into stocks. Okay, cool. He lived through the Great Depression and talked about it a lot. Nice. What? It's always actually interesting how people get in, because the stories can be just so different between everything. When I was a kid, I spent summers with him. He'd always have a Wall Street Journal and had CNBC on the TV before internet. Did you get into it then quite young, or because you said you started trading about 3 years ago? Or were you always investing, but now you're trying to do some trading as well? There's that news bit gone. There we go. And it opened my mind to it. Dan traded a few biotech stocks in the mid-80s, then had to call on a phone to place a trade and check in the price and paper each day. I bet you see that. I swear, even like in the early 2000s, wasn't that the case? I was watching, I think it was his show $1 Million Traders with that Anton Carell guy, and I think that was filmed in like 2005 or so, and even then they had to ring in with ring in on the phone, which I thought was crazy. I guess because from when I remember, you've never had that. But then I was thinking, probably came around in like the late 90s, 2000. Oh. But it was quite crazy. Yeah, I know of Anton's work. Yeah, if you've seen that show, but I said that was crazy. Let me have a quick look actually. So I think that was about 2005 or so. Million. I think it was $1 million traders or trader. Oh yeah, no. So 2008, and yeah, they were still doing that on the phone, which I was quite surprised. I think they had like the charts and stuff. You could see them on the computers, but I think you still had to call your broker back then to get into the trades. During the pandemic, realized how easy and instant the apps made trading and decided it was time to learn to go in. Yeah, I'm guessing, did you start off on like the Robinhoods and those kind of stocks, I mean, those kind of apps as well? I think a lot of people moan about how, not gamble-like, I guess they are kind of gamble-like, but how they seem to make trading easy, but I guess it does kind of get you into it a lot easier because it doesn't make you think the learning tip's going to be as hard, and then if you actually enjoy it, you'll stick to it even though you realize it's not as easy. Also as well, to SPY retesting its anchored VWAP, so if we are continuing down, this will be the level where it starts to sell off. DWAC as well, just retesting its deviations. So we'll see how it can do. Again, if we start breaking below that, that's where this move may be dead. But as long as we can hold it, we should be good. Started off with that, but had a balanced portfolio. Yeah, mine was pretty balanced until I could probably even go on my app and find it. I think it was probably about 8 months in or so. Discovered options for the first time, and I think I made like 700% in a week, and then yeah, that all went. So that was it. But that I'm kind of glad that happened though, because options is what kind of really made me enjoy the markets. So I'm kind of glad I lost some money on it, because then it made you work a lot harder for it. Made like 60k on AMC. Damn, that's it. That's amazing. I didn't actually trade those moves properly. The only one I traded, actually, well, I did trade the AMC and the GameStops, but I didn't trade them long buy. So I kind of just shorted them. That's when I was getting. Well, I understood options a lot more back then, so I just played the vertical spreads on them, and they were pretty decent for the money as well. AMC though, one of my friends is still holding AMC. I think he put in like maybe £1,500, and again, we would have been what, 18 at that time. To him, that was basically always the money, and now I think he still hasn't sold it, and it was worth like £200. I had actually been watching it since early Jan. When I heard about it, it was going bankrupt. Now my strategy is 50% VU, VTI, ETFs, 30% stock picks, 20% options. Damn, I knew it was dead when it hit 69 that day. To be honest, I think I started shorting it. It might have been like $30, $35. And then I don't think I had it. I think I again, because I was just doing vertical spreads, I think I kept putting money into about $50. And then after that, I was like, well, it's going to come down or I'll lose this money. I'm not putting any more in. And then, yeah, it came down quite quickly after that. So that was all right. Yeah, so well, you got your strategy of like the ETFs and stuff. Yeah, that's a bit like my long term, I guess. I think it's 60% SPY, or not SPY. I think that could be VU actually. And then I don't actually trade really any options on that account, not on that long term one. Yeah, and I got, I think, about 30-40% in stock picks. What I'll usually do is like the key names in the S&P, so the Apples, then even Nvidia, stuff like that. What I'll tend to do is when they're just really selling off heavy, that's when I'll jump into them. So I don't really diverge from trading the or investing in the SPY and stuff, but I'll just get them when that one seems quite sold off compared to the S&P in general. Actually, I do trade some, or I don't trade the options on that account, but I just do the covered calls and cash secure puts, kind of do the wheel strategy if you ever do that yourself. Sold 80% and let the other 20 ride for another month, then exited there at $45 a share. Guess that's the thing though, as long as you know how to basically get out, it's fine. But I said, even like my friend, and I know a lot of people who, they would have bought it at say $5-10. It's at $70 or just under $70, and they're not taking any profits. They're the ones anyway, just going to lose all their money, because if you're willing to hold it that long, when are you really willing to sell it? And I think that can always be the deadly thing, because yeah, cool, you can be up 5,000% or something, but who cares if you never take the money? But I guess again on the other end, I would never really get up that much because I don't think I could ever hold it that long. Like if I was in AMC from $5-10 and it went to 50, there's no way I'm holding past that level because wouldn't, or at least to me, it wouldn't have made sense to continue going higher. But again, that's why I guess I never get those.
Taking a look at the Fear and Greed Index, currently sitting at 82 out of 100, which indicates extreme greed, and the Crypto Fear and Greed Index at 50 out of 100, indicating neutral.
Here we go. Also, SPY is breaking its anchored VWAP, so now we just got to wait for the break on the S&P futures, but seems like it's doing all right on there, so could be more of a range-bound day. Looks like we'll probably end up fading most of that move. So we see how it is. Again, the euro is now not looking as weak, or it's not just a strong sell-off anymore, seeing a bit more pressure coming into it. 1 second, just had to check this. One second, I just have to check this. Okay, cool. I just had to reply to that, sorry. Got in 541 average, damn, 1,000 shares. Yeah, that's amazing then. SPY that test huge level. Yeah, I'm watching more of the futures now because I've got the anchor VWAP. I don't know what level you're looking at. I don't really actually plot levels anymore on SPY or the ETFs or SPY or the futures or anything. Don't you just use it, the anchored and the VWAPs and the deviations. It's about it. I don't know. Yeah, I don't really plot anything manually much anymore. It's either going to reject or all time highs. Yeah, most likely. I'm surprised we're seeing so much kind of movement on it today, considering, yeah, the only big name we had reporting earnings today was American Express and no news out today. So I'm surprised we're seeing so much movement. But I guess that's the way. Let me quickly check that. Also, anyone watching, if you're enjoying so far, don't forget to drop a like and subscribe. I'll put a tiny bit of this in the background. But again, if you guys got any questions or anything, let me know. Obviously, I'll answer anything or anything to chat about. I'm just doing something in the background. So again, I'll just put this on so you're not just hearing silence.
Heading towards a recession then?
It doesn't feel like it's headed to recession. It's very mixed, though. I mean, we've seen strengths in autos, metals, minerals, aggregates, coal, softening in chemicals, paper and pulp products, and then that intermodal business international that you talked about. So it's very mixed, but we were able to grow based on our service, and we're able to see that improvement. So I'd say it's mixed. I wouldn't say that we're headed, at what we see, we're not headed to a recession. The domestic intermodal business showing some improvement really is an optimistic sign.
But Joe, it's Sarah. Shouldn't it be a lot better now? We've seen the Inflation Reduction Act and the Infrastructure Act and the CHIPS Act and all of that. So much money going into building stuff in America. And I would think that would take a lot of railroad moving and shaking. And I would think actually.
Personal opinion, something's going to break in the economy. Inflation is not getting any better. Yeah, no, I definitely see that. I think the thing as well, I don't know if a lot of people don't realise, but even when they talk about the rates coming down and it's great and everything, they're still not going down in the sense, if inflation was, where were we at, 7% or whatever, everything's still staying at 7% at least. It's just not going up as much anymore. So yeah, I mean, I said I don't really know how, say, even, the bottom 25% are dealing with all this because it's probably a massive struggle. But yeah, there's something will always break anyway, and then we'll get a massive crash. But I guess from, either a trading or investing perspective can be great opportunities. So I guess that's always a pessimistic thing of being a trader or an investor is that's where you can make a lot of money. So I guess could be a relatively good thing for us, but at the same time, obviously not great for the country. Inflation was never 7%. Inflation was 60% overall, if not more. To be honest, you do see that on some things. Again, I haven't been living in the US now for about, I think, a year and a half, 2 years. So I haven't actually seen how the US properly has been dealing with the inflation, but in the UK, it's definitely, I think, worse. Our numbers are higher. Our bank rates are a lot lower. And here you can just see everything. Even eggs are up 100%. And it's just that more everyday things that you spend money on are the ones that have truly have just gone crazy. I truly believe the Fed in the UK is cooking up the books. Maybe, well, it is. I swear they did change recently how they measure the inflation number, or they changed certain things in it so it just didn't look anywhere near as bad. And I guess the thing I find crazy as well is not even so much the inflation, but yeah, the rates are so. Oh, it's about DWAC back at Anchor VWAP. So again, if we fail this, we could be done for the day. At least what I'm paying attention to. Selling off big on the ES as well, failed its anchored VWAP on the futures. It's like even how the housing market is holding up so well. I mean, if you were to get, I think it was a $300,000 house today, it's more expensive than getting a £700,000 house or $1 million house a year ago, and the prices are hardly falling. It's just ridiculous. But I mean, surely eventually it's going to have to run out. But I mean, I guess people have been saying that for years and nothing's happening. Yeah, food sky high for sure. Rates super high, houses sky high, food sky high, basic wage barely increasing. Yeah, that's what I mean. I don't understand how people, like the bottom, well, I guess probably even the bottom 50%, the people on normal wage and stuff are meant to survive. Like even over here, if you, in the US it's pretty much the same, but here you can borrow, if you're buying a house, for example, you can borrow 4 times your income. And I think the average salaries here is like £30,000 in the US. What is it in the US? Maybe a bit. I think it's a bit more than that, which should be anyway, because obviously the dollar's weaker compared to the pound. But yeah, you have that, and where are you getting a house for £80,000, or in the US, even what is it, 40,000 maybe in the US, where you're getting a house for 120. That's the thing that's crazy. So unless maybe then you're in a relationship, you're both earning that money, then you can get 240, and maybe that's a bit more achievable. But I think really, unless you're earning good money, the days of getting your own place by yourself are really coming to an end. Unless maybe you rent. But then that's why I was kind of crazy. You can then rent, spend double, probably 150%. No, probably about 50% more on rent. As a single person, because it's the only way you can afford to live, but then your payments are higher forever, really. Average house in my area, which is poor by our standards, is like 200,000 to 300,000. Yeah, it's just everything's crazy. I said, like, when I was in the States, I was living kind of Connecticut, New York area, and the houses there were, for maybe a 4-bedroom, it's a million and a half, which is absolutely crazy. And that's why if I go back out, I'm looking at the Florida area, because a bit more reasonable. It's still expensive, but at least I guess compared to the UK, when I see our prices are even more ridiculous. You can go to Greater London, get a 2-bedroom flat. Not even like in the US, obviously you normally have amenities, pools, gyms and stuff. Here you don't get any of that, and it will cost you $500,000, 600,000 for 2-bedroom flat. But it is all crazy.
Expectation that maybe perhaps it changes the market dynamic more broadly.
Also seeing DWAC bounce now off that VWAP and anchor VWAP level.
Potentially.
Yeah, we can have.
Yeah. Morgan, thanks. Morgan Brennan. All right, still ahead. Crypto investors turning away from Bitcoin, seeking elsewhere perhaps. Find out why and just where they're going. That's after the break.
Oh, I'm so sorry about that. I thank you. You put the comment. Had the mic muted for some reason. Sorry for that. The only things I said anyway was S&P. Yeah, looks like we're breaking the lows again. It can get quite ugly now if we're breaking that close on the SPY. Have the target of yesterday's low of 451.44, but after that could be quite ugly again. DWAC holding that anchored VWAP, getting that bounce could be a nice level. And the other thing I was watching for is on American Express, anchored VWAP at 172.75. I'd be short bias if we come into there. I think I was saying as well, just in case you're in the Discord, again, we keep getting these imposters. I've tried everything I can to ban them before they even join. It's definitely reduced them, but there's still a crazy number of them. So just know I will never randomly DM you asking you for anything, which I think that's what they do. Again, you can always check the username. Like this one had, I think it was a double L or something. Again, it's not me. So again, just watch out for those. We get them for some reason non-stop. Nothing I can really do about it, but I just try and ban them as they come in, and that's all I can really do. But again, a lot more reduced than we were getting before. What was it? Onion News Network. Trump can finally talk about DWC now, and the case is closed. I think this will run back to the 40s soon. Yeah, I'm seeing a lot of people jump in here to talk about how optimistic they are with DWAC. Again, it's different trading styles. It can definitely have that upside potential. To me, even if it does the upside move, I don't expect it to hold. So you might get that short squeeze or something. And if we do, fine. But again, I'll be looking at it short bias really above 26.88. So that's how I'm looking at it. But again, yeah, definitely move to run. Just we're looking to trade it a different way. What happens if I put a put? So I'm guessing you mean if you buy a put for 257 and the strike price goes below 257, am I still gaining? So if you buy a put right now for the strike of 257, what's Tesla at now? 253. Yeah, well, as long as it goes, the way it will work is as long as it goes in your direction, you'll obviously make money. If it goes against you, you'll lose it. All it will mean though is if you're holding it into expiration, you have to make back the premium for it to work out. So if I quickly pull up Tesla and I can see how much they're costing. So if we go to a Tesla 257, well, they've only got the 257.50 puts and they're costing you $240. So what it would mean for you to get break even into expiration, you would have to make, or the stock would have to go $2.40 in the money. So right now we're sitting at, we're sitting 20 cents in the money, so you can take 20 cents off the buy price. So you would then have did we say it was 240? So then 220. So basically you would need to see the stock come down by an extra 220 cents. So $2.20. So again, if we put that there, I'll put a line for you. So if you're holding into expiration, you would kind of need to see the price below around 254, kind of 25, and that would be near your break even. And then anything past there is pure profit into expiration. Again, if you're not holding into expiration, you're looking for the quicker moves, then obviously it's just going to be directional. If you're getting the right direction, you'll be in the money. If you're getting the wrong direction, you'll be out the money or losing money, if that all makes sense. One way you can actually do it as well, I don't know what platform you're using, but Thinkorswim, for example, you can pull up the option window. You can come over to puts. You can see what they're costing. So now they're costing about 244. And if you do you have to open it, click buy, analyze trade, and then you can see how that would all work. So if it's anything above, so 257.60, anything above that, you get your max loss. You break even at $255 and around 10 cents, and then anything after there is pure profit. If it goes down to 250, you would be up $500. So that's how you can always look. Most platforms will have something similar. That's how you do it on Thinkorswim, and then you can get an accurate reading of where you break even and all that. pull DWAC back. So again, I think that's the main watch for today. You use WeBull. I've got actually WeBull on my computer. Let me open it up real quick. Haven't used them in ages though, so I don't know if you can do the exact same thing on there. Let me have a quick look. Options. What am I looking at? What sites it puts? I've not used this platform in forever. It looks confusing. Am I being blind? What? Oh, puts. I am being blind. So the 275s. I don't know why they seem so cheap on this side. Was I looking at something wrong? One sec. Now I'm super confused. Tesla puts 257. They're $250 on Thinkorswim, only showing as 110. So unless the data's super delayed on here, I don't know. But yeah, I don't know how you track it exactly. Yeah, so you can sort of do it. So here, if you're on WeBull, so again, for some reason, these numbers are definitely delayed. So you might, if you're trading on them all the time, maybe it's up to date. But all you would do is you right click and then you can view put, and then again, it will tell you down here then. So your break even would be 256.28. I think that means. I don't even know. I'm so confused on this platform. I don't really use it. No, that wouldn't make sense. Break even price. Oh, yeah, no, that would make sense. Yeah, sorry. Yeah, so that's where your break even would then be into expiration. So you can check it like that. But again, I don't really use WeBull. Might be an easier way to do it. I kind of only ever used them. They have a good phone app. I think that's about all I used them for. Otherwise, I use Thinkorswim or Tastytrade for stocks and futures. I mean, stocks and options, and a Ninja Trader for the futures. Again, looks like we might push those lows on the S&P. Put the DWAC chart back on. Yeah, the phone app is better. Yeah, I think I'd say they probably have the best phone app out of all the brokers. You use WeBull and TradingView. I actually use TradingView. I've got all these apps actually on my computer. The TradingView I actually really like for this one thing, which Thinkorswim annoyingly does not do. And that's you can get the auto VWAPs from certain areas, which I love. So again, you can put from the year or the earnings or anything like that, which is great. But then you can also draw them on, which is why I like this so much, because I can literally say, oh, I want an anchored VWAP from that move, and then it will give you one right away. So I do like TradingView, but I only really use it for that. I think Thinkorswim is just the main one I've always used, so I'm just more comfortable with it. What indicators do you use for TradingView? Yeah, basically what I just pulled up. All I use on it is anchored VWAPs because, again, I don't really use it all that much. So, again, literally the only indicators I ever use are standard deviation channels, which, again, I get on Thinkorswim. That's why I use mainly Thinkorswim because they have the best ones, and VWAPs. So, even on Thinkorswim, again, you'll always see I have these here. So, I've got that's just a normal VWAP. If you just put VWAP on, and then this is a 2-day anchored VWAP, which I also love to trade off. So they're the two main things I watch, and then again I use TradingView, especially if I'm maybe looking at investing on the bigger name stocks like Tesla. I'll have longer term VWAPs on. So again, we can really put on SQ or anything, doesn't really matter. So this blue VWAP is from the most recent earnings. So again, they can normally be relatively good VWAPs to try and get directions. This one's a year to date. So again, this one will start from January 1st. And then here, that's just from a certain date. So that was when I last used it. That was a 2-day anchored VWAP. But again, I can change that to whatever I want. That's about all I use for TradingView, just the anchored VWAPs. What do you use for it? Or do you just use like the normal RSIs and stuff like that? DWAC looks like there's no more buying pressure really stepping in. Again, looks like we're retesting these deviations again, retesting that anchored VWAP, but really struggling for more or new buyers to come in. There we go. Put this on slightly as well.
broadening is really heartening to the bulls here. So you notice what's been going on the last 3 days. We're opening up and they sell into the rally. We tend to after the first hour. That's happening again today, but this is part of this summer seasonality valuation issue. But take a look at the sectors today. A little bit of a reversal today. Tech's holding up, but I want to point out healthcare and energy have been the big winners this week, and that is a sign of that broadening out story, which has been very helpful to the bulls.
Also, just to note, Oracle up 2.5%, XP also up 2.5% at 50, or actually at 6-month highs, near those 52-week highs. You also have Rivian tried to push to that $27.70 resistance, but sold off at $27.16 and now down at 24. So a massive sell-off on that, down 5.5%. American Express still down 4.5%. Palantir also down 4%.
A lot of people have been negative throughout the year. They are less negative, and I'll show you some numbers on that. Valuations are almost 20 times forward earnings. I mean forward earnings, Q3, Q4, Q1, Q2 into next year. That's a tremendously high number right now. So these high levels of skepticism we keep talking about, that's people who are out of the market, that's starting to go away a little bit. So look at some of these sentiment surveys, like this is the AAII numbers. We look at them, 51% bullish. That's a new 52-week high. That's the highest it's been a long, long time. It's normally 37%. 21% are bearish. It's normally 31% and above. So this is what I mean. And we're seeing this on the professional level, on the institutional level as well. Bearishness is slowly dissipating as the soft landing is gaining traction. So why are we getting this rally 9 days in a row in the Dow? Here's the broadening out story that's making everybody so happy that are bullish here, because the Dow is, of course, not an industrial index. It hasn't been in a long time. The leadership.
I do have to do something quickly. Again, we'll leave the news back in, and I'll try and be like 2-3 minutes. But again, if you have any questions, I should be able to answer them in a few minutes.
And Boeing. So that's certainly been very heartening to see. The best case right now, guys, is the S&P consolidates sideways. Maybe the momentum indicators come down. The bulls could argue for the next phase of the rally, with the S&P up about 18%. Finally, just on the NASDAQ rebalancing, guys, I wouldn't worry about the close too much. A lot of people don't understand this thing. Suddenly, you're going to have to sell Apple and Microsoft dramatically and NVIDIA at the close, because, of course, their weighting is going to be reduced in the NASDAQ 100. While you're going to see a lot of volume, it's unlikely you'll see big price moves. The reason is these indexers are very efficient at getting interest on the other side. And Sarah, there is no rule that says they must sell at the close. The rule is they must mimic the index, and there's synthetic ways for them to deal with that even before today. So just remember how this game works at the close. Back to you.
Okay, good explanation. Thank you, Bob. Bob Pisani. Let's keep the conversation going. In the words of our next guest, better than expected does not mean all is well. Joining us now is Sarah House, Wells Fargo senior economist. What are you concerned about, Sarah?
Well, I think we're still concerned about just the ongoing squeeze we're going to be seeing on consumers and businesses as we head throughout this year. And the Fed is nowhere near looking at a point where they're actually going to start cutting rates. So I think even as you're seeing improvement on inflation, that also means that you're going to be seeing passive tightening. And we think that's still going to put consumers and businesses in a pretty tough position. And maybe prospects for a soft landing have improved, but we still think it's going to be a very sluggish pace of growth going forward.
It all makes sense, but it's also the argument that has been used for the last now year and a half, since March 2022, when they started hiking interest rates. And against all odds, the consumer has held up really well, and the unemployment picture has also remained quite strong.
Right, but I think we are starting to see some more cracks on both fronts. So if you look at the labor market, for example, we have seen hiring downshift. So, over the first half of this year, we saw 280,000 jobs added per month. That's down from about 450 a year ago for that same time period. We are also seeing other signs like the average work week come down. And I think, generally speaking, less catch-up hiring to do. And then when we look at the consumer, so consumer spending has, of course, been augmented by those excess savings, by consumers tapping credit, but those savings are beginning to run dry. We're seeing consumers less willing to access what remaining excess savings exist, and of course credit has tightened substantially in the consumer space, and we're now seeing both revolving and non-revolving credit growth slow. So I think some of the factors that have augmented the spending picture are beginning to dwindle, and that is contributing to that squeeze on consumer spending that we expect.
So What kind of growth numbers then do you expect to see into the end of the year and next? And are you below consensus because of that view?
Yeah, so I think right now, consensus has still been pretty downbeat, if anything, looking for a recession perhaps earlier than we are. So we think that the economy can continue to expand through the second half of this year, but it's going to be at a pretty tepid pace. So, probably GDP growth under 1%, and we're looking for what's likely to be a mild downturn at the start of next year, as you do see some pullback in consumer spending, particularly in that durable goods space, and we do likely see that unemployment rate begin to rise and contributing to consumers getting more cautious on that spending front.
I mean, the one thing, Sarah, is you just don't hear it from a lot of the consumer companies yet, that they expect, some sort of sharp deterioration. And if anything, we hear and see some signs of acceleration recently in consumer confidence numbers, in some of the housing numbers, for instance, and some of even the manufacturing. I cited the Philly Fed yesterday. We know manufacturing is hurting, but some forward-looking indicators showing that things are improving. So it's just hard to reconcile that with what should be happening as a result of the lower rates and the lower employment gains.
Well, some forward-looking indicators might be, but on net, you're still looking at a leading economic index that's down for the past 15 months. And I think when we look at some of the hard data, so even as you saw, at least in terms of some of the headline improvement in like the Philly Fed, if you look at some of the details, new orders, combine it with what's happening with the New York Fed, you're still looking at some deterioration there. And we did see industrial production, manufacturing decline over the past month. So I still think that we're looking at a period of pretty sluggish growth, even as we're maybe not seeing things decelerate quite as much as they did in the first half of the year.
All right. Interesting view. Thanks for coming on to share it with us, Sarah. Sarah House, Wells Fargo senior economist. Appreciate it.
All right, as we head to a break, check out the biggest laggards on the S&P just for this morning. You got Interpublic there. I would assume that's on numbers. Omnicom reported earlier this week, and that was not pretty either. Generally, there are concerns about the advertising market in a broad sense, and that stock has had a bad week as well. I'm going to take a look at Interpublic. We're back after this.
Hey, sorry about that. I'm back. No, I just had to take a phone call. Sorry. But I am now back. So Kavana, quite crazy. Sold off massively, and then just been getting bought into. So I guess we'll kind of see what happens with this. But let me put that there so I can see the chat again. Okay. Yeah, so I said, main stocks really on watch was Rivian was on my watch this morning, but hasn't quite hit that level I was waiting for. So that's actually moved up a bit to 28.30. So main thing I'm watching for on Rivian, and I guess keeping attention to it in case it does push back up. But if it breaks kind of above that $28, I'm looking at a swing short on that. Again, Kavana, really, if it pushes the highs, I'm happy just to keep taking a short bias. Because I'm saying the thing with this stock is, again, how it keeps moving. Every time it keeps hitting these deviations, it seems to keep going high, but you keep getting these pullbacks. So I mean, if we keep getting these, I guess I'm keep being happy to short them. I guess is the main focus. We still got to come and fill this gap most likely eventually. So even if we do pop from here and break into new highs, to be honest, I'll still be looking for that kind of gap fill target anyway. So that should be quite decent. Again, the Tesla, I'm not actually really looking to trade that today. I don't think it's really near any sort of key levels for me to justify trading it, but keep on watch as always though, because it tends to be a big mover. Let me quickly move that. You also have AXP again. If it comes back to the anchored VWAP, I'm trading that. And Cavana, yeah, if we're breaking highs, I'll trade it. Otherwise, I'm good. And we're just seeing the SPY and the S&P basically just kind of be range bound. We'll keep coming back to these anchored VWAPs and just basically testing these. So I'm not too interested in taking trades right now. I think they're mainly just swings from now. And yeah, if we get a big move, I'll trade it. But I'm not too focused. Again, DWAC, if we can crack highs, I'll trade it short. And Cavana, again, if we can kind of break to $60, I'll trade it short. But I think they're my main two trades on watch as of right now. Euro pushing lows, SPY, or the S&P futures, so ES is again at anchored VWAP. So we'll see if we can start breaking it. We failed that one. Could be a retest, and this could eventually be that break. So we'll see.
This has been sort of a red hot target for him, and he's going after it, interestingly, potentially legally on the Florida Pension Fund, which owns roughly $50 million of AB InBev stock out of the, 180 or so billion. And you have seen you showed the stock price, big underperformance of AB InBev relative, especially to Constellation and Molson Coors, whose brands have benefited. And
yeah, and Modelo became the best-selling, right? The best-selling beer in the country,
beer in the U.S.
in
now
North
for
America.
second month in a row.
Bud Light, of course, losing what had historically been that top position because of this, wading into the culture wars. But interestingly, he would choose to enter this now, given it sort of seemed to have come towards its end, I guess. I don't know. I guess I'm wrong.
I don't know. It might work better for him than Disney, because Disney, I feel like, is more popular, don't you think, with Americans at the moment than Bud Light. As far as
also, just to note, 1 p.m. we have Baker Hughes weekly rig count data. So again, that we normally move the crude oil and can sometimes move the net gas as well.
Anything from that company as far as a response? The Bud Light CEO did one interview I saw on CBS and didn't answer any questions about whether they regretted it or would do anything differently.
Yeah, as for Iger, it's a week ago that he and I sat down in Sun Valley, and I did ask him, of course, about his continued, or at least the fight being brought to them by Governor DeSantis. Here's what he had to say.
It's concerning to me that anyone would encourage a level of intolerance or even hate that, frankly, could even become dangerous action that could be turned into some dangerous act of some sort. So it's concerning to me, but I don't really want to engage in the specifics, except to say that it's not our goal to be involved in a culture war. Our goal is to continue to tell wonderful stories and have a positive impact on the world. We are a preeminent entertainer in the world, and we're proud of our track record there.
Of course, that feud continues as well.
What's your guys' view on the DeSantis or Florida versus Disney? We've put a poll, so let us know what side you're feeling on this.
As punching bags in the culture wars, and whether that resonates. In the meantime, let's get over to Dom Chu, who's got a sector sort for us, Dom, and we're seeing quite a divergence here.
Yes, especially when it comes to media stocks. So the market is generally higher, although we're losing some steam here as the S&P 500 heads for a weekly gain if it can keep this pace. But we're tracking some of the laggards in communication services,
also
which
seeing
houses
Euro
many
break the
media
lows.
companies. Now, Interpublic, something David mentioned earlier on, is firmly in negative territory after cutting its annual growth outlook. Now, the marketing giant says that tech clients actually weighed significantly on growth as those companies start to tighten their advertising budgets a bit. Now, it follows a similar downbeat report from rival Omnicom over the course of the past week. Both of those names are on pace for their worst weekly declines since 2020. So keep an eye on those media companies, those ones focused on advertising. We've got more Squawk on the Street coming up, so keep it right here. After the break, more stories coming up.
Okay, there we go. On to the break from then. The bonds actually starting to sell off quite strong as well. Again, this anchored VWAP is actually really nice level today. On the open, we got that bounce, nothing crazy, but a nice bounce. Retest, we're selling off. Looks like we fell in once again, looking to push those lows. So again, I would be watching for that then if we're failing this anchored VWAP. Could definitely see a break to the lows. And again, from the future standpoint, I'd be looking at a 4,557.25 target. If we're looking at the SPY, then I'm looking at a 451.44 target. Is this a trap for bulls on Tesla? I wouldn't really say anything's happening here. Nothing's really standing out to me, I gotta say. Yeah, I don't know. I think I'd be paying more attention to the VWAP. We'll probably test that. I think that would maybe give you a clearer sense, but at this level and how we're moving today, you know, we're only down 1.5%. Doesn't really seem like a day where you're going to get really trapped. It normally happens on days where you get a lot more of a bigger move. So yeah, as of right now, I'm not too focused on it. So far as well, we have, what's that? I think 4 votes for Florida compared to Disney. Yeah, Euro's near those lows, still looking weak on the ESA. Again, Cavano's come back to these deviations, retesting this as a support. If we can hold, targeting anchor VWAP, could potentially look to trade that short bias as well. Could be a nice trading opportunity. DWAC, again, basically just staying flat on these deviations and the anchored VWAP. Potentially could get that snap down. If we do, targeting 1805 as that key support on the way down. So we'll see how that goes. There we go, Cavana selling off pretty heavy now, breaking through. Looks like we're testing those anchored VWAPs once again.
Set to hold a meeting this afternoon with top AI-focused companies, including Microsoft, Google, Amazon. The White House saying it has secured commitments from these companies to manage the risks posed by AI. But of course, exactly what that means, well, we'll have to wait and see. Meantime, it is worth noting, according to our latest All-America Economics Survey, that if you are concerned about potential AI risks, you're not alone. Steve Leisman joins us. He's got that story for us. Steve?
Hey, David, yeah, interesting results. While the tech industry and the stock market, they're welcoming artificial intelligence enthusiastically. The CNBC All-America Economic Survey finding widespread discomfort on the part of the public, what we call AI anxiety. In 2016, when we last asked the question, 36% were comfortable with it and 59% uncomfortable for a net negative rating of -23. Now, today, just 27%.
Yeah, we literally have no news out today. Most recent news is Russia, China, Saudi Arabia oppose plan to triple G20 renewable energy capacity.
Usually, for almost any question we ask, majorities of every single demographic group expressing AI anxiety. Take a look here. 18 to 34. They're more uncomfortable. They're the closest to all. As you get older here and come down in age or come up in age, sorry about that, you get more and more uncomfortable, 78% uncomfortable in the age 65 plus. When we ask about several public-facing uses of AI, there is little acceptance. Customer service, 66% uncomfortable. Medical diagnosis, and they hate driving, the AI driving vehicles most of all, 76%. Looking at how much some groups have changed since 2016, look at his professional managers. They were about even with it, now negative in a big way. Blue collar workers more negative. Income, low income and higher income, even both are more and more negative on it. What will AI do? 21% say it will make their jobs easier. 10% say more difficult. 18%.
I guess most people are fearing the replacement. Is usually the main things. I mean, that's why you have a bit of the strike in Hollywood right now. And yeah, I guess even things probably like even like the accountings and stuff like that will probably be able to be all AI done. But again, I still think I'd be quite far off where you can trust them with all that and everything. But to be honest, makes my life a lot easier. So as of right now, I won't be complaining. It speeds everything up. I think that would be the good thing. Like, if you can use AI to speed your process or speed the things up you do, then cool, it's great. But as soon as you, I don't know, as soon as you start getting rid of kind of like the human element out of stuff, then it could, I guess, then be a bit more dangerous. But using it, I guess, alongside humans can be quite beneficial. But I guess we'll probably see anyway, you'll see just AI done things soon enough because it's just cheaper or will be cheaper. Why are you going to pay someone $50,000 a year if you can pay an AI one-off cost or a monthly subscription to NVIDIA or something? I guess would always be the thing. Yeah, getting a nice sell-off. Yeah, I would mainly be watching then the futures today. The levels just seem a lot more efficient over on the futures. I'm kind of worried because I'm a STEM major trying to go into cybersecurity field. To be honest, so yours are probably the ones that will be fine. Like cybersecurity, people actually coding, anything like that, you're probably still going to be fine because you're going to be the defenses, I guess. But yeah, I think as well, I don't think it would ever get to the point, where there's literally nothing to do. It might just make the competition harder, but I guess naturally anyway, recently, go back 10, 20 years, it's probably more hard to get a job now than it was back then because I guess there's a lot more people per capita. So I guess it just be another thing to kind of wire more people out. And as well, I guess being a STEM major, it's probably it is one of the better areas to branch out for. So you'll probably be one of the last people affected yourself. Like even for me, I am doing a trading degree, which counts as it's under STEM. And I guess that's kind of why I like the idea of trading anyway, because even if everything did get replaced, you can still trade for yourself, even if, robots, AIs, whatever, trading the markets like they already do. So you'll be all right. Also, we just hit 11 a.m. But yeah, I don't know. It's not something I'm too worried about. I think, yeah, it would definitely be harder, but it tends to be what happens when time goes on anyway. Not really seeing too much movement. To be honest, we'll probably actually end the stream here because I think the main movement, I'm just going to set alerts out, would be DWAC if we break highs and Cavana if we can break the highs. They're the only two trades I'm looking at really entering today. And yeah, it's relatively nice. I might just go out for a bit. Also, we do have the S&P again. It looks like we're retesting the anchored. Considering we're testing that again so quick, it could now be the break. Bonds also pushing the lows. And you're basically just seeing the euro dollar consolidate at these lows. So I do think we'll call it a day. Was it? Most definitely just got to say, yeah, no point worrying about something not in our control anyway. So I hope everyone enjoyed the stream. Again, we'll have a few videos out over the weekend as always, but we'll be back on the live streams on Monday. So hope to see you then, and that's it.